With increasing pressure on expenditure and the need to look for alternative funding to finance projects, the government opted to float a mobile-based bond known as M-Akiba that would allow Kenyans to buy government securities using their mobile phones. This was done after the successful floating of the debut Eurobond that raised $2 billion 2 years ago. Last October, the government announced plans to launch M-Akiba, targeting to raise 5 billion shillings using the mobile money transfer platform. This was, however, halted, reason being,
when we were in the process of introducing it, there was a bit of instability in the financial markets and interest rates did go up. So we are now just waiting for the right time to reintroduce it, and we expect that we should be able to do that in this coming financial year.
The government is banking on the popularity of mobile money, in which M-Pesa alone in 2016 handled deposits worth 1.56 trillion shillings.
It's you can do it on your mobile phone. You don't have a lot of paperwork. It's efficient and sort of puts you on the same level as institutional investors. And that's why we want to fast track this M-Akiba as quickly as possible, so that the common person is able to invest.
This comes as stakeholders blame the low investor participation in the capital markets to low public awareness.
They haven't said it too much so that the youth can know that there is something like this, because as you can see, we are only two of us who have come as youth to learn about the investments and the bonds. So I think they haven't communicated much enough for the youth so that they can know and come and learn about the investments.
For this opportunity, it has opened doors for me to come and learn about it, but I think they should do this more often because not many of us know about bonds and shares.
This begs the question, what should one look out for before buying shares?
In terms of IPOs, it's the company. Look at the company, look at what are the fundamentals of the company, and then key to that is look at their pricing of that IPO, because IPOs usually come in at a very affordable price, and if you have the money, you should be able to at least invest in that particular company based on the fact that you've done your research, you've looked at the fundamentals, you like what the company does, and you can see the growth potential of the company.
How do you determine a good buy?
There are certain formulas, earnings per share. You look at the company's, as I said, fundamentals, and also get to understand the price history of that particular counter, where it has been, how it has moved over the years, and you also look at now some of the key things, the fundamentals, the balance sheet, cash flows. Now those ones require you to be extra savvy in terms of financial literacy.
Even as the Capital Markets Authority holds open day sessions such as this one for members of the public in order to enhance capital markets literacy, the plan now is to inculcate this in the school curriculums so that it begins early.
We note and commend the excellent partnership established between the joint financial sector regulators and the Kenya Institute for Curriculum Development that has produced core content on financial literacy for inclusion in the high school syllabus. It is pleasing to note that this curriculum is already in a pilot phase in a number of schools, with the training of teachers on the subject having been completed.
The 3-day Capital Markets Open Day ends Saturday. Ronald Willie, Business Insight.